Well, I'm not sure why silver hasn't kept up. It is a little perplexing, but that usually means there's an opportunity.
Hmm.
And unless there's something I don't know, and it's often something I don't know, but unless there's something I don't know specific to silver now, I don't know why silver is not. These things happen in markets. They've been happening for hundreds of years, and they will continue to happen. So maybe tomorrow I'll go buy some silver.
Jim Rogers is a veteran American investor and financial commentator with decades of experience investing and trading alongside other legendary investors like George Soros. During his many interviews, Rogers often touts gold and silver over assets like stocks and real estate, especially during times of high inflation and widespread concerns about global recession. The iconic investor is convinced that we are in extremely inflationary times for the global economy, as central banks are about to unleash a torrent of money printing in the coming months. As such, he believes the best bets in such times are assets that are more likely to increase in price. During an interview from 2023, the legendary investor said, "If you're in a world where prices are going higher, you want to own the things that are going higher in price." Rogers explained that fast-rising prices make fixed-income assets like bonds less attractive, and the higher interest rates that typically accompany them often weigh on the stock market and real estate sector. However, he added that commodities like gold and silver tend to appreciate in value during periods of inflation, which makes the precious metals space a good place to ride out the coming storm. Rogers is also particularly bullish on silver, which he says is the better bet today, as it's much more undervalued, despite gold being a historical beneficiary of price increases and geopolitical tensions. During a new interview with Kitco News, Rogers highlights his outlook on the U.S. and global economy in 2024. To begin with, Rogers is wary of the official narrative that the U.S. can pull off a soft landing scenario in 2024. He believes the U.S. economy, just like most other developed economies, is heading for a recession before year-end. Rogers adds that this recession, along with the coming elections, will spur the Federal Reserve to cut rates and start printing again, which will lead to more inflation and price appreciation for assets like gold and silver. We will now bring you clips from the interview. Please watch, share, and like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also join the conversation by dropping your comments and observations in the comments section below. We appreciate the support. Enjoy.
Well, I don't mind disagreeing with all those experts, certainly not. But it's been, the longest in American history that we've gone without a recession. It's a very long time. Doesn't mean it has to go, we have to have a recession, but we always have. And I see the various signs that something is going to go wrong soon. I mean, we see everybody thinking the same way. We think a lot of new investors coming in who think that this is easy and fun to make money. So, I mean, all the signs are there. Maybe it won't happen this time, but it always has, Michelle. The signs are rising that we're going to have problems again. And, in 2008, we had a big problem. But, Michelle, since 2008 and 2009, the debt everywhere has skyrocketed. So the next recession, my view is the next recession has to be worse, the worst in my lifetime, because the debt is so very much higher now than it has been ever before in my lifetime. Who knows? I'll watch Kitco to find out. But I know the debt has skyrocketed. Even China has a lot of debt now. China bailed us out in 2008. But even China's got debt. No, everybody has debt. Well, maybe North Korea doesn't have debt, but everybody else has a lot of debt. So it's got to be bad.
So what is the trigger here then? What do you think happens to put us in this recession and turn things around?
Well, the way these things work is it always starts in some place that no one pays attention to. In 2007, Iceland went bankrupt. Well, most people didn't know there was an Iceland, much less that it could go bankrupt. But then over the next several months, things got worse and worse. Bear Stearns went bankrupt, Lehman went bankrupt, and then everybody knew something was wrong. That's the way it usually works. So far, we've had a few minor problems in the world, nothing major yet, but when it's major and it's on the evening news, then we all know. This year's an election year, as you pointed out, in many countries, and politicians always want to keep people happy. So politicians around the world are going to be doing their best to make us all happy and keep economies strong and stock markets strong. But there comes a time when it gets out of control and not even the central bankers or the stockbrokers or anybody can control it. And I'm afraid that I see the signs that we're getting not there yet, but I see the signs that will probably come in the next year or so.
Do you think the Fed is able to successfully tame this inflation problem?
I don't have much confidence in the U.S. central bank or any central bank. The U.S. has had a couple of good central banks in the past 100-odd years. India had a good central bank chairman once, but most central bankers are bureaucrats and academics. They're just trying to keep their job, Michelle. They don't know what they're doing. And the way markets work, you said inflation is down a little bit. Well, that's markets go up, they correct, they go up, they correct. This is the way markets always work. And that's what's happening with inflation now. We're having a normal correction. I would suspect that we will see more inflation later this year.
So you expect inflation to rise if the Fed starts to cut rates?
Oh, especially if the Fed cuts rates. You know, historically, when the Fed starts cutting rates, markets go down because they know, oh, that's what we've been waiting for. You buy on the rumor, you sell on the news. So that's normally when the central banks start cutting rates, that's when markets go down. Michelle, central banks all around the world have printed unbelievable amounts of money in the last few years, a couple of years, huge amounts of money. As I said, Japan, the central banker goes to work early every morning because he's a good central banker, good Japanese, and cranks up the printing presses. Can't believe how much money they're printing in Japan and other countries. Maybe the U.S. has slowed down for a while, but Michelle, when things start going wrong, if they start going wrong or when they start going wrong, in Washington, they're going to print more money. That's all they know. They don't know what else to do.
Though Rogers has been predicting the worst crash of our lifetimes for a while, he is now certain that we are much closer to this historic event that experts believe will change the trajectory of the global economy forever. Last year, Rogers explained why he believes the next bear market will be the worst one ever. He said, 2008, we had a bear market because of too much debt. Look out the window since 2008. Debt everywhere has skyrocketed. It's a simple statement that the next bear market will be the worst in my lifetime because the debt has gone up by such staggering amounts in the past 14 years. According to the legendary investor, decision makers are not doing enough to address America's massive debt pile. He adds that this will continue to negatively impact the economy and also spell trouble for the dollar's status as a foreign reserve currency in the long term. For now, Rogers is investing in dollars because it is still the strongest currency, but he is ready to exit at the tiniest whiff of trouble. He is also looking to buy more precious metals, especially silver, which he believes is way too undervalued at the moment.
Well, I own gold. I own silver. I have for many years. I've never sold any gold or silver. Don't plan to. I hope that my children have my gold and silver someday. But yes, historically, gold and silver have been refuges in times of problems. And I'm an old peasant, Michelle. Us old peasants want to have some gold in the closet and some silver under the bed.
There you go.
But yeah, look under my bed. You'll find some silver. Look in my closet. You'll find some gold. I'm an old peasant. And us peasants know how to protect ourselves.
They always have some physical gold and silver in the grab and go bag. But Jim, are you adding to those gold and silver positions at the moment?
I haven't added recently, but if and when they go down a lot, I hope I'm smart enough to buy more. If I were buying one right now, and I'm not, it would be silver, because silver is down 60% from its all-time high. Gold is at an all-time high. So on a historic basis anyway, silver's cheaper.
Right.
And maybe I'll buy some tomorrow. I mean, who knows? I'm optimistic about gold and silver and other commodities, as I explained before. I have no idea why silver is down so much. You should watch Kitco, for goodness sakes. You can tell me why silver is down. But it is down nearly 60% from its all-time high. That's not a bubble. I assure you, that's not a bubble. Maybe gold is a bubble. I doubt it, but maybe. But silver is certainly not a bubble.
Jim Rogers is predicting a torrent of economic woes for the United States and the global economy. He expects the first signs of major trouble to begin in less than 3 years or even later this year after central banks go on another money printing spree. Rogers is particularly concerned about inflation, which he describes as the natural result of every money printing campaign. Fortunately, he believes real assets like gold and silver will perform well during the troubling times ahead. Please share your thoughts on the interview in the comments section below. Also, give this video a thumbs up, subscribe to the channel, and turn on the notifications bell so you get notified every time we upload a video. We appreciate the support and see you in the next one.